Hi everyone, welcome back. So today I thought I'd go through quick exam techniques for getting through the group question in FAR. So again, just to reiterate, this is where you have to prepare a consolidated statement of financial position and sometimes a consolidated statement of profit and loss, but there are often other requirements. So there are 5 steps to, I think, maximizing the number of marks you're getting. Firstly, read the requirements and know which statements you have to prepare. Personally, what I like to do is I like to know who my parent is, and then I set up the relevant financial statements, okay? So one after the other. That gives me a structure that I can work with. The third step for me is then I set up the standardized workings. Fourth step, we work with the information that we do know. Okay, so populate the standardized workings with the information from the question. Okay, so they'll normally give you balance sheets or of the two other of the subsidiaries and the associates. Okay, so you can use those to populate standardized workings or the FS even. The fifth one is to update the FS and the standardized workings with adjustments, okay, and any information that's missing. Right, so it's just following everything in a systematic order, working with what you know, and then figuring out what you don't know, and then just updating everything really. They can be really fun to do, and you can get a lot of marks on these questions. You can get more than 70%, I think, on a group on these kinds of questions, definitely. And I thought I'd highlight 4 things that you need to remember in the exam that I think are quite helpful. So assets and liabilities, they need to be shown at fair value at group level. Okay, so the funny thing about group accounting is that, for example, internally generated intangible assets, we don't normally recognize those as intangible assets. Well, that changes at group level. Okay, you actually recognize those, so you're trying to present the results at fair value, which is different. There are going to be some standardized additional lines in the FS. So you're normally going to have goodwill, you're going to have NCI, and you potentially might have investment in associate. Okay, so at least 3 lines are going to be shown. There might be some additional lines as well, like contingent consideration, but those don't come up every time. Those only come up some of the time. Now, for each adjustment that you post, it's going to impact multiple areas. So it's going to impact your workings, and it's going to impact your FS. So it might impact more than one working. Now, you need to consider, is the adjustment going to impact the values at acquisition, and is it going to impact values at year end? Okay, it's for subsidiaries. So consider where all the effects are going to be. Another thing to consider is the adjustment going to impact the retained earnings of the subsidiary, or is it going to impact the retained earnings of the parent? Okay, so subsidiary, I think, feeds into working 2, so easy enough, whereas retained earnings of parent is going to impact working 5, I mean. Okay. Now, there's another thing that when I was doing the papers recently, I was losing marks on, and that was the investment line in the balance sheet. Okay, so sometimes what can happen is that you can assume that the investment line is going to be removed completely because all the investments relate to subsidiaries. Not always the case. Okay, so what you need to also consider for consolidation is that there might be some investments in other, in equities or stocks. Okay, so you still have a value in the investment line. So the way to calculate your final investment value is you do your initial investment and then take away the costs of investments in associates and take away any costs of subsidiaries included in the figure. Okay, right, so they don't always account for the whole value of the subsidiaries in the investment line. They might account for the bit that's easy to calculate. Sometimes what you can have with subsidiaries is deferred consideration or contingent consideration, which hasn't been accounted for at all, so you don't need to subtract those. Okay, and that's basically it really. It's just following everything through systematically and trying to pick up as many marks as you can. It's not about it's not about getting 100%. And what I also want to show you as well, you know, with each line in the balance sheet, make sure you're showing the workings of how you're arriving at that given line. So like trade receivables, 50 plus 35. Okay. If you that means that you're going to get at least 2 marks. If you should have put 50 plus 35 minus 2, you would have got full marks. But at least by putting 50 plus 35, you're getting maybe 80% of the marks. Okay, so if this was 3 marks, you might be getting 2 for for at least showing this part. Okay, so just what my point is that try and show as many workings as possible, because in case you make a careless mistake, you're going to at least get a few marks here and there. Okay, that's what I wanted to say, everybody. Hope that was useful, and as always, please make comments on my YouTube videos. Thanks. Bye.